Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Most investors are familiar with the Nasdaq 100 index, but not everyone is familiar with the Nasdaq Q50 index. Joining me to discuss the new product tied to the index is Scott Kefer, Senior Portfolio Manager at VictoryShares and Solutions. Scott, it's great to see you again. Welcome back to Trade Talks.
It's great to be back. Thank you, Jill. Yes, you're right. The Nasdaq 100 index, I think most investors are very familiar with that sense of innovation and access to high growth companies that it offers. The Nasdaq Q50 index has actually been around since 2007. And simply said, it represents the 50 next largest stocks that would be eligible for inclusion in the Nasdaq 100 index. So when you think about the methodology of the Nasdaq 100, it's simply the 100 largest companies that are listed on the Nasdaq Stock Exchange, excluding financials. Well, the Nasdaq Next 50 index is simply the 50 stocks after that. So therefore, they're both sharing that same methodology, the same access or exposure to growth and innovation that the Nasdaq is known to attract on its exchange. But the Q50 really offers that potential for access to some of these disruptive companies before they become household names, before they've graduated to the Nasdaq 100. So one way to think about it is the Nasdaq 100 represents today's leaders in innovation, whereas the Nasdaq Q50 represents the next generation of innovators. So VictoryShares is really excited to team up with Nasdaq and launch QQQN, which is the VictoryShares Nasdaq Next 50 ETF, which is designed to track the Q50 index.
The idea of capturing the potential of high growth innovators before they become household names is really interesting. Can you give us an example of stocks that graduated from the Q50 to the Nasdaq 100?
Absolutely. The chart that we're sharing on the screen right now highlights some of those notable graduates from the Nasdaq Q50 each year going back to inception. It not only shows a few examples, but shows the number of graduates each year. Since 2007, there have actually been over 100 companies that were once constituents of the Nasdaq Q50 that did go on to graduate into the Nasdaq 100. One of the, or a few of those examples, if you just look at 2020, for example, there have been 3 companies that graduated from the Q50 up to the Nasdaq 100. The first is listed on the slide here would be Moderna, which is a very well-known biotech company today for its potential to deliver a vaccine for COVID-19. But the company had been in the Q50 index long before anybody really heard of COVID. And only recently, just in the last couple of weeks, went on to graduate to the Nasdaq 100. Another company that graduated this year, DocuSign, is a company that is a leader in electronic signatures and document management. Went public in, I think, 2018, moved into the Q50 in 2019, was already experiencing exceptional growth. But with the disruption of the pandemic, they've seen an incredible acceleration for their technology that they offer and their solution. And then the third graduate this year, Dexcom, which is one of the leading companies in treating diabetes. They have a technology that helps to continuously monitor diabetics' glucose level. This is a company that's been in the Q50 index, delivering exceptional growth all the way back to 2015. And as you look back through this chart, you're going to see plenty of other now well-known disruptive companies like a Splunk, like a Lululemon, Align, the maker of Invisalign braces. Even Netflix and Facebook were one-time constituents of the Q50. And again, the main point here is that it is offering this potential to get into some of these disruptive, innovative companies early, but not too early. Most of these companies are currently, the market caps range from about 7 billion to 25 billion. So these are companies that are well established in their businesses, in their markets, not so early that they are, more of that speculative type stage company.
How about concentration in the Nasdaq Q50? Since this is a market cap weighted index, does that automatically mean high concentration in a few stocks?
Yes, you're right. They are both market cap weighted indexes, but the Q50 does not have that same level of concentration you find in market cap weighted indexes that include some of the mega caps. So here on this chart, what you're looking at are the 150 largest companies listed on the Nasdaq, excluding financials. So that shared methodology in one chart. where the largest 100 moved to the right in these turquoise bars, forming the Nasdaq 100, and the next 50 largest in the navy bars, forming the Q50. And what you see is the concentration effect that occurs when you include some of those mega caps. So in the Nasdaq 100, the largest position, Apple, over 12%. You could see those other turquoise bars that are pretty sizable right behind it, the Microsofts and Amazons, and then a quick decline in position size down to the smallest position of Liberty Media at just 0.04%. So somewhat inconsequential to the outcome of the index. Moving to the left, and when you look at the Nasdaq Q50 index, when you cap weight those constituents, you see the largest position there as of June 30th, just prior to it graduating, was Moderna, mRNA, at about 3.6%, with a pretty shallow decline, I should say, in the position sizes from there, where its smallest position, Discovery, is 50 basis points, so still meaningful. But one of the things I really love about this chart too is that it reinforces that concept of the Nasdaq 100's focus in today's leaders, the Apples, the Microsofts, versus the Q50 and its exposure to those next generation innovators. So sticking with that Moderna example, when it was exiting in June 30th, the Q50 index at 3.6%, it was still a meaningful exposure. As it graduated in July into the Nasdaq 100, its position size declined to just 20 basis points. So the Nasdaq 100 still has exposure to some of these next-gen innovators, but in much, much smaller weights, really setting up for that potential complementary exposure QQQN could provide to someone who is an existing shareholder of something like the Nasdaq 100 index.
Scott, since the Nasdaq Q50 index has been around since 2007, can you give us an idea of historical performance?
Sure. So in this last slide, I think the title says it all, that results speak the loudest. This index, as you said, and I mentioned, has been around since October of 2007. It's a published index and track record. It's not a back test. It's been around long before COVID and even prior to the great financial crisis. And obviously, past returns are not indicative of future, but here we're comparing the index results of the Q50 to the Russell Midcap Index, and you can see the returns have been quite exceptional. So all of this coming together, again, leaves all of us at VictoryShares extremely excited at the opportunity to team up with Nasdaq and launch QQQN and offer exposure to this exciting index to our clients.
All right, Scott, great to see you. Thanks so much for joining us on Trade Talks.
Great to see you too, Jill. Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.